Dear investor, in the last 1 month, we have seen a substantial fall in equity markets in all the global markets all over the world due to the coronavirus issue. When we looked at the last 3 decades of equity markets, there have been 3 instances of such dramatic falls. One was following the internet bubble in early 2001, where global markets fell dramatically. The second was in 2008, when you have had a global financial crisis. And third was the current development. In each of these 3 developments, global financial markets fell substantially across the world and by a very, very significant way. And in all the global markets have seen double-digit declines in a very significant manner. There were 2 types of investors. One were investors who actually cut their equity positions by redemptions or stopped their SIPs during these market corrections. The second were people who added to their SIPs or invested in equity mutual funds during these periods or invested in asset allocation products in these periods. All the monies made in the markets accrued to the people who actually invested in SIPs or added to their SIPs in these periods or increased their investments in equity mutual funds during these periods or invested in asset allocation funds during these periods. So the current correction, in our opinion, should be used by investors to increase their SIPs, to increase the investments in equity mutual funds, to increase the investment in asset allocation kind of products at this point of time. If people choose to redeem from equity mutual funds, it will be the wrong time to do it after the correction, and we believe such people are not likely to make money in the long run. So we think that this is actually an opportunity to increase allocation to equity markets. If you looked at all these crises which have happened, whether it is in 2001 or in 2008, markets have always rebounded, and investors who have invested into the crisis have made huge returns by being patient and by investing into these corrections. We continue to think Indian equity markets is a good long-term story. Today the difference is that the equity markets are much cheaper, and therefore the upside potential for investment in equities at this point of time is much higher than what it was a year back or 2 years back across almost all the stocks in the market. We look forward to increasing allocations to equity from all of you, and we look forward to much higher allocations to asset allocation products at this point of time from all of you, and increased allocations in SIPs, and we look forward to ensuring that none of you stop your SIPs at these attractive valuations of equities. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.